Hey guys, and welcome back to another video, and today I'm going to be going over a super under the radar NFT pick. This is a SPAC merger that I think a lot of people have not yet heard about, but when they do, I think this stock is going to explode, just like another NFT stock, as I'll show you later in the video. The stock that I'm talking about is MUDS, which is merging with TOPS. Now this is very close to me because during the pandemic I did actually get into card collecting itself, and so I think I truly understand the massive potential that this company has and the demand that there is for trading cards. Just to give you a little example, in order to get cards for myself, sometimes I'm waiting at Walmart or Target for up to 4 to 5 hours just to get a couple of packs of cards. So don't sleep on this stock. Getting right into the video though, TOPS stock will be going public with a valuation of right around $1.3 billion, which I think is fairly reasonable. Now you might remember that TOPS was actually public in the past before Michael Eisner bought them out for $385 million and took them private, but he's now decided to retake them public, likely due to the large sports card boom. This is a great time to take them public because there is a lot of tailwinds for them to accelerate their growth with. Now, one important thing to understand is that TOPS is not all just trading cards. That only comes in at around 55% of their revenue. They also have a variety of digital apps, a gift cards, an online gifting service, and a confections business. I didn't know this before I started researching for this video, but they actually own companies like Ring Pop and Bottle Pop. I think TOPS is a company that really brings back a lot of nostalgia for a lot of people. Collecting baseball cards as a kid and eating a Ring Pop is something that a lot of the older generation would remember. I think this graphic by TOPS points out a lot of really important things. The first thing that it does is show that they have products at all different price points. To be honest, you're not going to get anything for $1, so I don't know what TOPS is talking about, but you can get cards for as cheap as $5, and there are cases, believe it or not, for $25,000 to $50,000. So if you don't know anything about the trading card boom, this is not a small industry anymore. People are paying millions of dollars for sports cards every single day. The other thing that it shows you is that they have a variety of ways that they sell their cards. 25% of it is coming through retail. So these are going to be retail exclusive boxes that they sell at Target, Walmart, etc. Then you have your e-commerce. That's going to be everything that they sell on their website. And then you have hobby, which takes up 45%. You are only going to be able to buy those boxes either on their website or at your local card shop. Those do not sell at Target or Walmart. And they're usually the higher priced cards, like this $25,000 box. That makes up for 45% of their sales. Yet another thing that this graphic shows is all of the partnerships that they currently have. One important thing to know about trading cards is that in order to produce a card that actually has the logo as well as the name of the team on it, you must have a partnership with those players or with that league. So they have partnerships with the MLB, Star Wars, Bundesliga, MLS, the NHL, Disney, Formula 1, which is very new, and they hope to gain rights for UEFA Euro 2024. Let me show you what I'm talking about when it comes to the licensed versus unlicensed cards. You can see that this card is made by Panini, which is one of TOPS' competitors, and they have the license for the NFL and the NBA. So on the card itself, you can see there is no Angels logo on the helmet, no Angels on the jersey, and it just says Mike Trout, does not say Los Angeles Angels. In comparison, when we look at a TOPS made card, you can see that there is an Angels logo all over the helmet, jersey, etc. It's a real unedited picture, and then there is also the Angels logo in the bottom right. In general, collectors heavily favor cards that are licensed and that have all of the logos on the card. So owning those licenses allows your cards to become more desirable and more valuable. Now that we've covered some stuff about the physical cards, let's get into the true topic of today's video and the reason why I think TOPS will grow a ton, and that's their brand new NFT cards. Their first NFT or non-fungible token packs were released on April 20th. They've been out for just 5 days and they've already sold $4.3 million worth. They've already moved up to third on the list of NFT collectible sales. Let me go ahead and give you another example of the demand for trading cards. So they sold these 2 packs on their opening day, April 20th. They had the standard pack for $5 or the premium pack for $100. Now, anyone who's not involved in card collecting would be like, what the heck, $100 for a pack of fake cards? But they're actually a lot more than $100. You can see that recently, that same standard pack that was $5 just sold on eBay for $80, and the premium pack that was $100 is selling for anywhere between around $600 to $700. So there's both a lot of profit for Topps to be making, as well as a lot of profit for anyone who bought these packs early on and then sold them off to someone else on something like eBay. Just to give you another idea of how this might work, let's say you want to buy a MUDS card. So you're going to go ahead on Atomic Hub, which is partnered up with Topps. You search up MUDS, and it'll pop up a variety of different cards for you to buy, ranging anywhere from $17 to apparently almost $5,000. One important thing to note is that Topps actually gets a small portion of the sales price if you were to buy a card on Atomic Hub. So the money making for Topps doesn't just end at selling the packs themselves. For every single time these cards sell, they're making an additional amount of money. Let's take a quick look at how they expect their revenue to stack up leading up to 2022. Currently, their revenue sits at right around $567 million. This is expected to accelerate up to $777 million with a compound annual growth rate of around 20% per year. I think this is pretty conservative, as they're saying that they'll only be earning $51 million a year from their NFTs in 2 years. Given the fact that in just the first 5 days, they've already made a large amount of money, almost $5 million, I don't see how it would be possible that they're only making a total of $50 million a year in the next 2 years. We'll see though, I could be being a bit overly optimistic, or they could be being a bit overly conservative. Let's have a quick look at that other NFT SPAC that I told you was blowing up, and that's Playboy. They came to the market in an NFT merger as well, and they weren't moving much, to be honest. They were sitting right around the $12 to $13 range until they announced their NFTs, and that caused a massive 400% run in the stock, all the way up to the $50 range. In comparison, you look at Mudrick Capital Acquisition, which is acquiring Topps, and they've made their run up to highs of just over $14 and are now consolidating around the $13 to $12.50 range. I think this is a great place to buy. I'll tell you, I actually did buy right after they announced it. I bought commons and warrants and have already seen a very nice return. I think there's plenty more room to grow though, because a lot of people just don't know just how big of a boom the sports card trading market has had, and I think this stock will start to catch on. I hope you did go on to enjoy today's video, and if you did, make sure you leave a like down below, and if you learned something new, make sure to hit that subscribe button so you don't miss any more videos like this one. But other than that, I'll see you in the next one.